There are a lot of irons in the fire right now, hypothetically, for the Biden administration. What exactly will the priorities be for the current administration going for the next few months?
So I think it's pretty clear that green infrastructure just is front and center. There's a lot of discussion within the party about how you fund it, and that's going to be crucial for representatives like particularly Joe Manchin. We always talk about him on this show. His role as this kind of centrist who's very keen that they don't do another huge fiscal bill that's not unfunded. So I think that's where the debate is going to be in the party, is how much of it do you fund and how do you fund it? But I think that the point that has just come across there is that there's a tendency for investors to see bills as kind of good or bad, when the reality is, if you've got a big infrastructure bill that has lots of positives in it, that's partially offset by taxes, it does become a who are the winners and who are the losers conversation, rather than necessarily a kind of outright, well, increases in taxes are bad for business in general. I think it's much more nuanced than that, particularly if you care about long-term potential growth, which we know lots of investors do.
Stephanie, the one word that I hear all the time when we talk about elections and then inaugurations is infrastructure. I've heard it for decades now at this point. How likely is it that an infrastructure deal actually gets done? They always talk about it being bipartisan, yet it never, ever seems to get any kind of traction.
So I think it's really likely that an infrastructure bill gets done, a green infrastructure bill specifically. It's very clear that it's the green element of this that's really supercharging support in the Democratic Party. But as you said, will it be bipartisan? I struggle to see a lot of Republicans getting on board with a bill that requires tax hikes as a part of a funding package, which I think is likely, right? To get the Joe Manchins on board, you need tax hikes. And then if you have tax hikes, Republicans are less likely to get on board. So I think what we learned from the COVID-19 support bill that's been passed already is that the Biden administration recognizes that this is its chance to get things done, because come 2022 and those midterm elections, they'll probably lose the House and then they can't do anything. And I think that's really what's driving support and what's driving the approach. So I'm kind of factoring in that this is likely to happen. The bigger question is just how big is the bill and how is it funded?
We've talked about this notion of investors looking towards infrastructure plays. It happens every time there's an election cycle. People look at construction aggregates. They look at steel manufacturers. We did it in the beginning stages of Trump's presidency. We are doing it right now for Biden's presidency. We've done it in the past for Obama's as well. What exactly then can you expect to see from a corporate standpoint as to the companies that really stand to benefit if we do see some kind of an infrastructure push?
So I think what's really interesting with this bill versus previous is around, as I said, the kind of green element of it, because it slightly opens up opportunities, particularly for those materials providers who are important not only to kind of traditional infrastructural work, but also that kind of green infrastructure packaging and building renewable energy, manufacturing and things like that. We know that they want to weatherize lots of buildings. So in some ways, it's quite traditional, but I think it's the green element that opens up a lot of opportunities, which is quite consistent with what investors are increasingly asking for, which is opportunities to contribute to the just transition, to, tackling climate change. This might provide both of those things.
And before we let you go, tax policy is going to be a huge focus for many investors in the coming months as we talk about this notion that we have to pay for a lot of these initiatives. If there is a tax hike, and if it happens for some of the wealthier Americans and corporations out there, how likely is it will have a significant impact on the U.S. economy?
So I think this is where it's really important to bear in mind that a tax hike would be used to fund quite a significant stimulus, especially for long-term potential growth. This is what I was talking about earlier with there's nuance here. I think the reality as well is that different companies pay different effective corporate tax rates, right? So that's really important as well. So just because the rate says 28% doesn't mean that every single company ends up paying 28%. And again, I think that's where the differentiation will come in. We know as things stand that there are companies paying much, much less than the existing rate. And I think that will continue to be the case. The question is just how much does the change impact the bottom line? And that's where you need to get into things like not just what is the company doing, what can it do in terms of its tax rates, but also what's its profit margin, and will it benefit from the opportunities that get pushed through by this big infrastructure bill?
Shepard Smith here. Thanks for watching CNBC on YouTube.